Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
New York coffee. The market had since late January been pressing down, making lows last week not seen since November 2024. In the big picture, I originally put this down to the dark blue September to October 2025 bearish shift pitchfork in showing the way lower, but it was helped by a late December last year to January this year very lopsided head and shoulders top. The subsequent move lower punching down through the dark blue lower time, which is currently at 301.80. After a weekly key reversal down in the last week of January. Prices have most recently started to stabilize below the 50% Fibonacci line of the January 23 to February 25 move at 286.10, right on the July 25 lows, based around the June 2011 high at 276 3/4. This left us with a descending scallop pattern formed over the last 3.5 weeks. Last week prices broke down through the ski jump of this pattern and thus has given me the opportunity to lay out some targets below of a primary target X in the 263 zone, even zone, and a secondary much harder to reach target X1 down in the 219.50 zone. I have now also drawn a small but seemingly effective bright red, though it doesn't look very bright red on my daily chart, a small bright red lower time, a small bright red January based bearish Andrews pitchfork, as the market has utilized the bright red lower time, currently at 274.20, and to a lesser degree the bright red middle time above, currently at 292.80, in showing the bearish angle of attack. There is something else I'd once again like to look at here, and for this I am indebted to Ray Bradbury for asking me about New York coffee 44 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly, longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom for bright red neckline on my monthly chart, currently at 277.70. This break higher over this neckline reached its primary target on the upside, but there was a secondary harder to reach, much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line here at 433 3/4. That's quite close in the scheme of things. Prices did indeed turn lower up at this keen combination of the 100% projected Fibonacci line and the target at 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20 and below the high of May 2011 at 308.90. However, in July and again in August last year, the market started to form a base on top of the bright red neckline, a horn bottom if you will. Then in August 2025, with its monthly key reversal up, the market raced all the way back upwards, and we saw an extension to that move up early September 25, but not reaching quite as high as we saw back in February last year, before dropping lower and setting up September 2025 as a monthly bearish army. Since then, prices initially trickled lower, before this month making a major move down to test the bright red neckline. In this process, we have formed what looks like the mother of all long-term double top patterns between late 2024 today. Consecutive closes below this, assuming no false breaks, below this neckline, and we would have such a double top pattern with all the implications such a move lower might have. Please just remember these patterns here on this monthly chart are longer term patterns, in some cases very long term patterns. And I cover them more fully in my long-term coffee technical analysis video published in January. In the meantime, please just keep that 277.20. So close, it's 277.10 at the moment, 277 even. But keep that 277.20 in the bright red breached and soon possibly broken neckline, currently at 277.70 in my close at the end of this month, and obviously in March as well, will be supremely important in this. London coffee. 38 weeks ago I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above." End of quote. This overhang of bearish pressure and ammunition is important, as it started back then to press down, heightening the breaks lower. The reactionary rise seen since early August last year pushed up through some significant resistances. These turned into supports and some very keen ones, notably the trio of interesting 50% Fibonacci lines of November 21 to February 25 move at 38.08, the May 21 to February 25 move at 36.49, which held up the market in late December last year, and crucially the March 20 to February 25 move at 34.81. The first two eventually gave way, though the 50% Fibonacci line at 36.49 did hold up prices in December last year, but they gave way as well, and the third is about to be tested this week. However, the main overhead resistance, the February 25 to date downtrend, which is currently at 41.88, had enough of an impact with me that I drew a parallel bright red bear channel based around the September and December 2025 lows for a bright red lower bear channel line currently at 33.99. And this is the next real support after the 50% Fibonacci line at 34.81. So, with all these moves lower, what now? Well, I said last week, and I quote, "We might take a leaf from New York Coffee's book and look at the last 3 weeks' actions as a possible small descending scallop pattern." End of quote. This now seems a likely case, and it gives us the following: a primary target X down in the 34.15 zone, with a secondary much harder to reach target X1 down in the 30.04 zone. Let's try that one, 30.04 zone. We'll now see over the coming weeks if this vicarious analysis from New York Coffee works here on London Coffee. I'm also going to start thinking next time about an October 25 to late January 26 bearish Andrews and bearish Schiff pitchforks.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.